Success comes in cans, failure in can'ts. Wilfred Peterson. My friends, you can spend 10 to 15 minutes each and every day learning the nuances of these charts. Practice trading. When you think you're good at that, do some fractional trading. You can figure this out. It takes experience, it takes some time, and once you master it, all the time you spent will be worth it. So, just think about what does it mean when you can accurately track the movement of stocks and ETFs. The world is your oyster. This is what you're striving for, and you can do it with 10 to 15 minutes each and every day. We have a great training for our subscribers. You can subscribe for free at chartingwealth.com. Buying and selling on good or bad news. If you don't know the immediate answer to that, should you be buying and selling on good or bad news? The answer is neither. You need to watch the stock charts, correct? When we look at what the overall mood of this market is, we talk about it every day. Look at the weekly chart on the S&P 500. It is strongly down. It is going into the fourth week of down movement. Now, this is a slowdown in the down movement, but that price percent oscillator is still tracking down. Derivative oscillator is still going down. We have a green spinning top showing us some indecision, but the mood is still a lot of heaviness. Down today, 2.32%. So as we look at things and track what is going on, we can see some indecision as far as our Heikin-Ashi candlesticks go, but that price percent oscillator, which is our main indicator, and the derivative oscillator still trundling down. We go from the weekly to the 2-day. What do we see there? We had 2 days of up movement. Now that up movement has slowed down markedly. This new candle will finish drawing on Friday. Derivative oscillator still negative. Price percent oscillator, which was going up, is now a little less than flat. We'll watch and see. Price is moved above the 2-day, still below the weekly. It is touching it with its upward wick. But again, remember, overall mood still quite down. What do we see happening after many days of up movement on the half-day chart, dropping through the trend line and heading over? Price percent oscillator still positive, a little less than flat. Derivative oscillator positive, losing upward momentum. So still lots of downward pressure. All things being equal, the market tends to move in the direction of what? The largest chart. Always remember that. What are you supposed to do on Wednesdays at the close of the market? Back up. Go to your big charts and click through them and set in your mind and in your notes what the overall mood is of the ETFs and the stocks you track, particularly on the weekly, and also salt in there where that 2-day is. Now, what happens on a daily basis, the intraday with those half-day charts, the 195-minute charts, because that's how much a half-day is. It's not 4 hours, okay? It's 195 minutes. So what do? You use that intraday chart to give you a feel for sort of what's happening throughout the days. Shows you, what went on in the morning, what went on in the afternoon. But what's really showing you the overall mood is going to be that weekly candle and then that 2-day along with it. Now, we see, as I said to start, the S&P down 2.32%. Man, the NASDAQ down 4.01%. A hammering. We have a solid green spinning top wick on the top, wick on the bottom, price percent oscillator jacking down. The derivative oscillator heading down on that weekly chart. 2-day looks very similar to what we saw with the S&P. Derivative oscillator losing downward momentum, price percent oscillator negative. Had been heading up, is now tracking down. Red spinning top forming solid red after that green up candle falling off, right there on the 2-day trend line. We'll see how things finish on Friday. Same kind of look on this half-day chart. We saw where it was already slowing down. We talked about this yesterday with that red open box candle in the afternoon on Wednesday, and then down in the morning and afternoon on Thursday with some bad earnings reports and such. And derivative oscillator losing momentum. Still positive, price percent oscillator positive, losing momentum heading down. So that is where we are on stocks as the potential deleveraging continues. What do we see on bonds? Down 0.78%. Of course, we had that weekly vertical crossover in bonds back on the 7th. We saw things go down that next week, jacking down the week after. That was the week ending the 21st of January. Then the sideways slide, and now we see where things this week are continuing down. Have we hit the low of the prior week? It doesn't look it. 2 weeks ago, 140.18, 140.02, so getting close. Price percent oscillator drifting down, derivative oscillator heading down on the weekly. 2-day, we see this sideways slide underway, and then the slide down starting again. We saw where that Tuesday, Wednesday, the 1st and 2nd of February had pushed out through the weekly trend line. Now price dropping back below it. Derivative oscillator is still positive, losing momentum. It popped up and now is moving down. To price percent oscillator has remained negative, was flat, now heading down. So we'll keep an eye on that, how it wraps up on Friday. And of course, when we look at the half day, we can see where things really hammered down in the morning, recovered a little bit at the end of the day. Let's move on to gold. Oh man, I just keep hoping gold's just going to take off and rally and move, but they keep beating it down. What do we see this week? Red down candle. Are we going to have a weekly vertical crossover? Not yet. Was looking like that might be a possibility at the beginning of the week. Hasn't happened yet. We'll look at this chart tomorrow. If you look on the left-hand side, you can see the price percent oscillator is at 0.14. The exponential moving average 8 period, our red signal line, 0.13. So not crossed over going down yet, but a big old red down candle forming. Derivative oscillator right there, just barely holding on to green. So we'll keep an eye on things. We can see where all of this, movement was ginning up with that down movement last Wednesday and Thursday, and then Friday, Monday, big red down candle on the 2-day. Slowed down on the Tuesday, Wednesday, and then on Thursday pushing down again below. You can see where it has been pushing below that 2-day trend line, and not much of a trend line, only connecting 2 candles. But the derivative oscillator heading down, price percent oscillator heading down half day. You can see where gold had been tracking up, down in the morning, a little bit of recovery in the afternoon. Overall, only down 0.15%, and that price percent oscillator crossing over going up. So maybe there's some hope we're not going to have a crossover on gold at the end of the week. It's not happening right now, so I'm not sending out the text message. Don't know that it will occur, but those of you who are listening, be watchful for it. It could. Okay, that is where we are, folks, when it comes to our 4 big charts. Let's lastly turn to Bitcoin. We have a solid green candle week that's forming. That's a slowdown in the strong down movement of those 4 prior weeks. We've seen this before. It happened back on the week ending the 23rd of December. And then we had a doji after that, and then the plunge started again. Big 4 down candles. Look at that price percent oscillator still heading down. Derivative oscillator's been losing some downward momentum for a while, but still quite negative, the overall mood in all the crypto space. I'm looking, you can't see this, but on the left-hand side of my chart with all the crypto ETFs we track, every single one of them down. 2-day, we can see, again, a bit of a sideways slide there. Red down candle forming for first day of this latest. Price percent oscillator negative and flat. Derivative oscillator negative, losing downward momentum. And of course, we can look at where things have been going over the last day and a half, and again, just tracking down. Still positive on that half-day chart. Derivative oscillator losing upward momentum, but again, overall mood on that 2-day and weekly. As far as the New York Times Bitcoin index, still lots of strong downward pressure. So no hope in this crypto space yet. Folks, that's where we are. Hope you enjoy the training on news tonight. And again, thank you so much, Patreon supporters, for all of your support. I sent out your 20 weekly vertical crossovers. They're in your email box. If for some reason you don't see them, never forget, we post everything at the Patreon site also, so you can get that information there too. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.